Financial Analysis and Reporting, Problem Solving by Christine Ann S. Enriquez. For problem number 1, someone's company's income statement for the year ended 2022. What is the beginning inventory? Purchases is 1,500 pesos. Cost of goods sold is 7,000 pesos. Ending inventory is 3,000. So for the step 1 is the given. Purchases is equivalent to 1,500 pesos. Cost of goods sold is 7,000 pesos. And ending inventory is 3,000 pesos. Step 2 is the formula. To get the beginning inventory equals cost of goods sold plus ending inventory minus purchases. Step 3. Identify the beginning inventory. So the value of cost of goods sold is 7,000 pesos and the value of ending inventory is 3,000 minus the value of purchases, which is 1,500, equals to 8,500 pesos. So the final answer is the beginning inventory of someone's company is 8,500 pesos. For problem number 2, Joy Company enjoyed a profit of 800,000 in 2019. In 2020, the company recorded revenues of 1 million and expenses of 450,000. In addition, it recorded 300,000 of assets and 75,000 of liabilities. The tax rate for Joy Company is 20%. What was Joy Company net income for 2020? In this problem, it is asking for Joy Company net income for 2020. So, let's identify the given first. Profit for 2019 is 800,000. Revenue is 1 million. Expenses is 450,000. Assets is 300,000, liabilities is 75,000, and tax rate is 20%. Step 2 is the formula. To get the income before taxes, we must subtract the revenue to expenses. Then, income before taxes minus income tax is equal to net income. Step 3. Get the income before taxes. So the value of revenue is 1 million minus the value of expenses, which is 450,000, is equal to 550,000. Step 4. Multiply it to the tax rate. So the value of income before taxes is 550,000, multiply it to the tax rate, which is 20%, and we will get the answer at 110,000. Step 5. Subtract income before taxes to income tax. 550,000 minus 110,000 is equal to 440,000. So the final answer is the net income of Joy Company for 2020 is 440,000 pesos. For problem number 3, the BOD declared 5 cash dividends for every shares held to stockholder of record as of January 18, 2024 to be paid on March 31, 2024. The outstanding shares as of January 18, 2024 is 100,000 shares. Prepare all the appropriate entries needed on date of declaration, date of record, and date of payment. So in this problem, it is asking in the entries of date of declaration, date of record, and date of payment. Step 1 is the given. Our given is 5 cash dividends and 100,000 outstanding shares. Step 2, entry for date of declaration. So according to the problem, the date of declaration is January 18, 2024. So the entry is Debit is retained earnings, which is we will multiply the 100,000 outstanding shares to 5 cash dividends and we will get the value of 500,000. Credit, cash dividends payable, also 500,000. Step 3, entry for date of record. There is no entry for date of record because it only indicates the cut-off date of shareholders who will receive the dividends. Step 4, entry for date of payment. According to the problem, the date of payment is March 31, 2024. Our debit here is cash dividends payable, 500,000, and credit is cash, also 500,000. Problem number 4. The company paid 1 million dividends, of which 80% is liquidating dividends. So, step 1, we must identify the dividend first, which are 1 million dividends and 80% liquidating dividends. Step 2 is the entry. Debit capital liquidated, which we will multiply the 80% liquidating dividends to 1 million dividends and we will get the value of 800,000. Debit retained earnings, 20% times 1 million dividends. We multiply the 1 million to 20% excess because the 80% is liquidating. So the value of retained earnings is 200,000. Credit is cash dividends payable, which is 1 million. Step 3, entry for payment. Debit cash dividends payable, 1 million, and credit cash, 1 million. For problem number 5, the BOD declares 10% stock dividends to the stockholders of record 12/31/2022. The outstanding shares as of 12/31/2022 is 1,000 shares with par value of 100 pesos per share and market value of 150 pesos per share. Step 1. The given are 10% stock dividends, 1,000 shares, 100 pesos par value, 150 pesos market value. Step 2. Entry. So, our debit here is the retained earnings. First, we will multiply the 1,000 shares to 10% stock dividends and we will get the answer of 100. And after that, we will multiply the 100 to 150 pesos market value and we will get the value of 15,000. Credit is stock dividends distributable, 15,000. Step 3. Entry to be distributed on January 31, 2023. Debit, stock dividends distributable, 15,000. Credit, ordinary share capital. We will multiply the 100 to 100 pesos par value and we will get the value of 10,000. Credit share premium, 5,000. And that's all. Thank you.